Hello, superstar traders. Welcome back to this YouTube channel. My name is Tony George, you all know, and I'm the head of education and product research for EQ Markets Global. I'm super delighted to have every one of you here on this YouTube channel. This video, I promise you, is going to be very short, and of course, it's to address Forex swap. So yes, um, sometime 2 weeks ago, we took a trade call, and of course, it didn't get to our take profit. So some of us had to leave the trade to run till the next day. And of course, unfortunately for us that day, we had very high negative swap. And although the trade was now running in profit, we were still in negative. I mean, in total, we're still in negative, but the trade is currently running in profit. And a lot of people were asking, why is that? And by the time we went to check back, we now noticed that apparently that day had a very high swap, high negative swap. So a lot of people began to be curious, asking the question, what exactly is Forex swap? So I decided to do this video to address and to educate us on what Forex swaps are. So let's quickly go into business, okay? Now, you need to know that so long as you're trading margined products, and I mean margin products that you take leverage, okay? And remember, you can't trade CFDs without leverage. You take leverage to trade CFDs. So what exactly is leverage? Leverage is simply borrowed money. You fund $100, but you have $100,000 purchasing capacity in the market. Where is the other $999,900 coming from? It's borrowed money. Okay, so long as you are taking leverage, you're borrowing money, and of course, once you borrow money, interest rates and all is going to really apply. So this is where Forex swap, or what we call rollover fees, come into play. Okay, so what exactly are swap? They are type of interest that are charged on positions that are held overnight in the Forex market. So once you open a trade, let's say Euro USD, you open a trade on Euro USD and you let that trade to run till the next day, okay? A swap fee will be applied, okay? So long as the trade runs from today into the next day, a swap fee is going to apply, all right? Now, one good thing with this swap fee is that depending on the swap rate and the position that is taken, the swap can be positive or it can be negative. Now, let me explain. When I mean positive, it simply means that you are going to be paid interest because, okay, I'll come to the reason why you're going to be paid interest. So you're going to see a positive interest, in positive swap rather, on that particular trade. So it simply means that you probably will be running in profit, and you're running in $10 profit, but you're going to be seeing, say, like $11, or you're going to see like $12. The additional $1 or $2 that is on the profit you're running could be the positive swap that is applied to that opened position. And of course, the swap can also be negative. Now, in this video, I'm going to show you, all right, I'm going to show you all the assets that you trade and how this swap really do work, okay? So let me just quickly explain, okay? Let me just quickly explain. So if we say buy Euro USD, okay? If we say buy Euro USD, you are, okay, let me use this. What you are buying is what? Euro itself, the base currency. And of course, the quote currency, like we earlier said, is that currency that you use to make payment for whatever thing you buy. Or if you're selling Euro USD, you're selling the Euro, which is the base currency, but the quote currency, which is USD, is the currency at which you're going to receive payment. Okay. So in this case, where we say buy Euro USD, okay? In this case, where we say buy Euro USD, you're buying Euro, but you're borrowing USD, okay? You're borrowing USD in order to fulfill your buy order on Euro, okay? And of course, if we say sell Euro USD, it simply means you're selling Euro, okay? But you are borrowing USD to what? Fulfill your sell order on Euro. Now, this is what happens. Remember, every country has interest rates, right? Every country has interest rates. Now, let me give you a perfect example. USD, let's go with USD JPY, right? This is just basically to let you understand how this works, okay? Every country has their interest rate. So I'll just give you as an example. Currently, USD interest rate, okay? USD interest rate is currently sitting at around 4.5%. Okay, currently, let's say 4.5%. This is an example, right? And JPY, okay, JPY is currently sitting at around negative 0.10%. Okay. Okay, so sorry, just a second. All right, so sorry about that. So if this is the typical interest rate of the two pairs, okay, the two currencies, USD and JPY. Now, this is what happens. This is what happens. Now, if I am to buy USD JPY, okay, if I am to buy USD JPY, typically the interest rate is going to be what? The base, okay, the base minus the quotes, okay? So if the base is greater than the quotes, it simply means that you are going to be paid the interest rate. So what does this tell us? We're going to simply have 4.5%, okay? And minus the quote. The quote is already negative. That gives us more like a positive, right? Negative gives us positive, 0.10%. And of course, this is going to give us about 4.6%. And that's going to be positive. So it simply means that if I am buying USD JPY with these conditions, it simply means that I'm going to be receiving a positive swap, right? I'm going to be paid swap of 4.6% of whatever volume I am trading. That makes sense, right? So this is how it happens. But of course, if I'm selling, if I am to sell USD JPY, it simply means I'm going to get a negative swap. Now, let's quickly go over and I'll show you. Let's quickly go over and I am going to show you a lot more things. All right, so swap fees varies considering the following. Number one is the broker. Of course, sometimes brokers can have their own markup on swap, right? Aside the country's interest rate, many brokers can mark up the swap, okay? So, of course, you might see USD JPY buy at 4.6 on a broker. You might go see it at 4.8 or at 5 on another broker. It's because of the markup, okay? Now, number two is the type of position that is opened, okay? So if you're going long on a particular asset, it might be positive, it might be negative, and the short can be positive or can be negative as well. And in most cases as well, you can still see both negative, both long positions or short positions being negative. So whether you're buying or you're selling, you're going to get a negative or a positive swap depending on the position as well. I'm going to show you that as well very briefly. Then number three is the tradable instrument. Now, some tradable instruments have very, very high, some tradable instruments have very, very high, very, very high swap, okay? They have very, very high swap. I'm also going to be showing you a few of that if the time will permit me. And then, of course, the number of days the position is opened. Of course, every day a swap is charged. Now, let me quickly also mention, we have 7 days in the week, but we have 5 trading days in every week. That 5 trading days would be Sunday, no, Monday, Tuesday, Wednesday, Thursday, and as well on Friday, right? It simply means Saturday and Sunday we don't trade. But what the broker does is that the Saturday and Sunday, of course, interest rates will still be charged, okay? And so those, because of course, they are parts of the week. And of course, if you borrow money, the weekends as well will count, true? So what happens is that the 2 days that are not to be traded, brokers actually find a way to fix it within the 5 trading days, and of which some brokers you're going to see on Wednesdays, they charge ×3 of whatever swap fee you're going to be paying that Wednesday. All right. While some brokers will charge on Wednesdays ×4, on Friday maybe ×2, and the other days 001. All right. But whatever is the case, it must amount to about 7 trading days. Some brokers will charge you on Monday 1, okay, which is 1 day. On Tuesday, some brokers will charge you 3 days. That is 4 already gone. And then on Wednesday 1, Thursday 1, Friday 1, that's the 7 days. Whatever is the case, all right, it varies with brokers, okay? It varies with brokers, but you know that you surely will be charged for the 7 days of the week. So the remaining 2 days will be factored into one of the trading days, either Tuesday, most times either Tuesdays or Wednesdays. And then lastly is the nominal value of that position. Okay, now let me quickly show you. I want to quickly show you. Okay, just pardon me. Let me just quickly show you this. All right, so you can see the MetaTrader for my trading platform, right? Now I am going to be showing you the swap details of all these assets, okay? I'm going to be showing you the swap details of all these assets. So let's look at gold. So I'll simply tap on it and click on the details. Now, what do you see there? If you look below, you're going to see the swap type, okay? The swap type, it simply means points, simply means that the swap are charged in points. Now, if you're going long on gold, you definitely have a negative swap of about 34.494%. That is for today, okay? And if you're going on short for gold, you're going to have a positive swap. That is 26.161 points, all right? Now, these points will now vary, will now amount to the dollar equivalent based on the volume you are trading. So we're going to do a little mathematics now, okay? Don't get scared. We're going to do a little mathematics right away, okay? So let us assume that I am going long on gold, okay? I am going long on gold. That is, I am buying gold. What swap will be charged for me? So the swap calculation is usually the pip value multiplied by the swap rate multiplied by the number of days you're willing to hold that trade, right? I'll go back and I'll show you that formula, but you can still take it down. The pip value multiplied by the swap rate and multiplied by the number of days that you want to hold it. So let's come over back to gold now. It simply means on gold that the swap for long, that is buy position, is 34.494% negative. All right, if I am to open a trade, okay, if I am to open a trade with 0.01 lot on gold, that is 0.01 lot, that's the pip value. I'm going to multiply that, okay? I'm going to multiply that with 34 times 34.494, right? And then multiplied by the number of days that I want to hold this trade, multiplied by, let's say, only 1. So if it crosses from today, Friday, and opens up on Sunday, I'll be charged just 1, assuming, right? That is multiplied by 1. So it simply means that if I am to hold this trade, remember it's negative, I would be paying about 35 cents negative. All right, I'll be paying about 35 cents negative, all right, to the broker because I had a negative swap. Now, on the other hand, if I were to trade a short position and leave it till the next day, right? That will be 26.164. Okay, so the volume 0.01 times 26.164, right? And then multiplied by the number of days. It simply means I'll be credited 26 cents. Okay, it simply means that I'll be credited 26 cents for opening a short position on gold. Now, this is an example, a typical example on gold. There are so many other pairs that we could probably look at. Okay, let's look at GBP USD. What's the details on GBP USD? Now you can see that on GBP USD, we have both swap long and swap short being negative. Okay, we have both swap short and swap long being negative. So let's say I am going on a long on GBP USD. Okay, I'm going on a long on GBP USD. This is about negative 2.629. Okay, 2.629. So again, let's try that out. 0.01 the volume times negative 2.629. Was it what was there? Yes, exactly. That was what was there, right? Then multiplied by the number of days, say 1. So it simply means I will be charged. Okay, I think 0.01 multiplied by 2.629, right? So I will be charged only about 3 cents approximately. Okay, I will be charged only about 3 cents approximately for holding a buy position, holding a long position on GU. Okay, now this varies with the lot size that you're using. Now remember, if I am to use one standard lot, it's not going to be 2 cents or 3 cents. So let's look for one standard lot. So this is one standard lot multiplied by 2.629. Okay, remember it's negative. It simply means if I'm using a one standard lot, I will be charged approximately around $2.7 negative swap, $2.7 for holding GBP USD till the next day. All right. Now, what is also very fascinating, like I told you earlier, is that the weekends are fixed into some of the days that you will have to pay for. So sometimes on equity platform precisely, on Wednesdays, you might see some spread. Some of the number of days is not going to be 1 on Wednesdays, rather, the number of days is going to be, say, 3. And on some of the assets, you're going to see the number of days to be 4. Okay, so let me quickly do this. All right, so let me quickly share my screen here and I will be able to show you. Beautiful. So on every brokerage platform, okay, sorry about that. On every brokerage platform, amazing. So on every brokerage platform, you will be able to check which of the days that the broker precisely chooses to charge you times 3 or times 2 or times 1, or at all it doesn't charge you. And of course, you can find that on equity platform. Let's quickly go, since equity is our #1 broker. Okay, and of course you can do well to sign up an account with equity. All right, simply go to www.eqmarketsglobal.com and sign up an account with equity. So let's quickly go over. Under products, you can come to financing fees, and under financing fees here, I can decide to check the financing rates and financing fees for this quarter, this current quarter that we are in. So I'll simply hit the download, and of course it's going to download the whole data for me. So let's quickly look at it now. All right. Now, if you watch here carefully, from Wednesday, the 9th of August 2023, all right, you can see that the rollover days there is what? 3 for AUD card, 3 for AUD CHF, but apparently it's just 1 for AUD JPY. It simply means that the other days would have been fixed in some of those days, either on Tuesday or on Thursday, as the case may be, all right? But you can see some are 3, some are 2. It simply means that if I am to place a trade on CHF JPY on Wednesday, I would have paid only what? For 1 day. Whatever is the swap fee or swap rate for that day, I'll pay for that day. And of course, if I'm to trade AUD card, I'm going to be paying 3. All right. So whatever I have as swap fee for that day, the P value multiplied by the swap rate, then multiplied by 3. Okay, because that particular day you're paying times 3 for 3 days and not for 1 day. Okay, so you have to first of all, sometimes if you're using very huge lot sizes, right, you need to also be aware of all this, okay, before you go ahead to place your trade. Okay, so I just saw 1321 exactly. Look at it here. So Euro Polish zloty, you can see that here, right? Let me zoom in a little more. So you can see Euro paired with Polish zloty. On Wednesday, you would have paid 3. On Thursday, you would have paid 2. And then as well on Friday, you would have paid 1. The following week, Monday, or Tuesday, one of those days you pay 1, and the other day it will be 0. So you can see. So this is how swap fee always work. Okay, this is how swap fee always work. So this is a Monday and Tuesday. The following week, let's look for that Euro Polish zloty that we saw the other time. Now watch, on Monday you're not paying anything, and on Tuesday you're paying 1. So Wednesday you paid 3, Thursday you paid times 2 days, Friday you paid 1. Okay, that's about 6. On Monday you're not paying, and then on Tuesday you're paying 1. Altogether 7. So you are not the one to decide how many days you should be charged. Okay, you don't decide how many days you should be charged. These things are already there on the brokerage platform. Today is the 11th of August, right? But of course, you can see all these information for the number of days that could be charged, even up to, let's see. All right, so this runs even up to September the 7th. So it's a whole quarter data that has been released for you to work with. All right, so I believe you now know how swap works, and I believe this will be helpful the very next time you're placing your trade, and of course you are thinking, what could be the effect of swap on my trade? Okay, this is exactly the effect of swap on your trade. So if you're new to this YouTube channel, please simply go to www.eqmarketsglobal. All right, simply go to www.eqmarketsglobal.com, and on that beautiful website you'll be able to create an account with our most preferred broker, Equity, because Equity has the best swap that you look out for, the smallest swaps rather, okay, the smallest swaps, and of course you will also have very tight stop loss to trade with. All you simply have to do when you come to this website is click on the register icon. Okay, and if you click on the register icon, it's going to direct you back to Equity website. The essence of you clicking on register icon, first, the essence of you going to www.eqmarketsglobal, it's so that you will continue to have more informative and educative contents like this, number one. And then, of course, capable hands are going to be there to manage you. And of course, so that we can add you up to our amazing group and platform, all right? We have our Telegram group. You can look for us, EQ Markets Global. But more especially, we have a precise special WhatsApp group where we do weekly mentorships, weekly tradings, and many more that is going to benefit you. If you don't sign up through the www.EQ Markets Global website, then you probably will not stand the chance to be part of this amazing community. All right, thank you so much. And also do also subscribe to this YouTube channel, then leave a thumbs up for me. Drop all of your questions in the comment section. I love to read your questions and reply to them. All right, if it's a compliment as well, drop those compliments for me in the comment section, and I would reply to those compliments as well. Thank you so much, guys, and see you in the next video.